Hello, everyone. This is Stock Market Daily. Thank you for joining me today. It is June 21st, 2023. As always, please don't copy my trading strategies because you will lose money. This video and others are only for educational purposes. So looking at the S&P 500 chart, clearly we had another down day today. We had a pretty big gap down, actually pre-market. And I was looking at the pre-market. And what I do in the morning before the market opens, I look at the SPY because you can't see anything on the SPX, but you can see on the SPY. If you look pre-market, you could see where the SPY is trading at that moment in time and where, for example, the lowest low for the pre-market was. And you could kind of give yourself you could compare it to the SPX chart and give yourself a mental idea of where the SPX is going to open and what was the lowest low during the pre-market time and how to best position your trades when you are selling premium. Okay, so that's kind of what I do. I have never actually mentioned this before, but I'm mentioning this now. So on up days or down days like this, where there's a big drop from the prior close or big gap up from the prior close, you look to see where I look to see where the SPY is, because that is open pre-market. And basically compare and contrast between the two graphs and the two charts and see where we're going to open here and where to kind of, expect there to be a bottom. So I did that today. We'll get into that a little bit later. But the reason why we had this big drop from yesterday's close, a lot of people might think that it was because of the Fed Chair Jerome Powell. He had testified before the government today. However, most likely that was not it. There was CPI data that came out of Europe, and it did not look good. They still have very sticky and continuing on inflation. Our numbers are appearing better than in Europe. So most likely that is why we are seeing this drop. Additionally, a lot of the growth, most of the stocks that are we see here that I show on a daily basis, like Apple, Microsoft, Amazon, Nvidia, Google. The next one is Tesla. Tesla has a lot of weight on the S&P 500, and they were downgraded today from, I believe, buy or outperform or something to hold, just because, the article stated that I read was because they were thinking, the analysts are thinking that they're going to be having to lower the price on their cars, which is going to impact margin. But in reality, it is also because the stock had run up so much so fast, and all of a sudden, we're looking at about, I would like $100 more what they were from a couple of weeks ago, right? So what does that say about the rest of the stocks? What does that say about Apple? What does it say about Microsoft, Nvidia and Google and things like that, where they've also run up really far and really fast? And I don't care what people say about AI. Personally, I think that's great technology and it's going to make them a lot of money, but it's something that's going to happen probably in the future. I don't know if it's happening right now, where they're making a ton of money from it. But there's still a lot of headwinds with AI and the economy. So to me, a downgrade on Tesla, because they ran up so fast and so high, also kind of reflects on some of these other stocks that ran up so high and so fast, but nobody has said anything about it yet, maybe because they have a prospect of this AI. And but also, I think that, everybody kind of knows that technology stocks, the big tech, has run up a lot lately, and they have to give up some of those gains most likely very soon. So that kind of plays out into the next thing I want to show you, where after the market did open, we had quite a bit of selling on, this is just a picture that I took as the market was, let's see, 9:46 Eastern. So as the market opened, we had a little bit of a rally here on some of these tech stocks that started to turn really ugly really fast. I mean, these stocks were falling off a cliff here. If you take a look, all of them pretty much were going down. Apple, Microsoft, Amazon, Nvidia, a lot of red candles, Google. However, at the same exact time, and I'm sure Tesla too, Tesla, if you would see it here, I wasn't looking at it, but if I had it here, you would see it. But at the same time, the advanced decline line of the S&P 500 was ripping. I mean, it was going up. So there's a big rotation going on early, I don't know, maybe pre-market, but early in the market during, the first 30, 40 minutes or so, where value stocks were going up and increasing in price, and people were selling off the rest, the big tech. So I thought that'd be an interesting thing to share. If you didn't notice it, it was very apparent. You could see Altria and Walgreens and things like that ripping while these guys were selling off. And obviously the S&P 500 is heavily weighted with these stocks, but at the same time, there's enough of the other stocks which didn't bring it down too much. So I was watching this, and I was thinking, okay, if the value stocks also start selling off at some point here, which could possibly happen just in case Jerome Powell says something that is that we might have not heard before or we didn't expect, that could really kind of send things down very quick. So based on that, I placed my trades. And like I said earlier, I'll come back to where I placed my trades today. I didn't look for a specific data. I didn't look for a specific, price or premium to collect. I looked pretty much what was the lowest low of the SPY during the pre-market, and it was somewhere around 4360 level. So I decided to just go below slightly by 5 points. And I placed two only just to be safe. So 43.55 and 43.45 is the only two trades that I placed today. Now I did have my the calls, and let's see how many there were. There were some. Was this today? No, this is not from today. I'm gonna have to adjust that. But there were some calls that were also in the money as well. And as you know, I do have quite a bit of calls. Actually, I counted today how many I have, and I have 10 calls, and 9 of them are in the money. There's one that is still out of the money that I sold. Not too long ago. And that one's still sticking around. It's not in the money. But on the call side, here I'm pulling it up, I had the 42.65. I had 2 of them, and I went up in strike price to 42.70, but I had to roll it into June 27th. So even though we were still going down pretty significantly on the SPX, the SPX implied volatility is very low, and it's actually getting lower. So right now it is at 13.2%. We're at 13.2% implied volatility on the SPX, which is very low. So it's getting a little bit harder and harder to roll positions because there's not much premium built into the out of the money options. So that's the reason why I had to roll it to that far of a date. And normally that's what happens when the market starts going up. If the market was going down at a more drastic, severe way, I'm sure the implied volatility would go up and we would have more premium on both the call side and the put side. So I think that's it for today. I don't have any, let's see, I don't have any positions for tomorrow on the call side. Finally, I don't have to trade anything on the calls, but depending on the price action tomorrow, I may grab one of my calls that is in the money, probably one of these right here, the 4305, and I may buy it back and at the same time sell it over here for I might have to kind of give up not only might, I will have to give up about 5 points on the strike price in order to roll it back one day. However, if we are going to have another down day, it's, if there is going to be like a strong indication that we're going to be going down tomorrow, I might have to do that, because in the end that will be a better outcome. I don't think we'll reach 4,300 tomorrow, but it was certainly possible. However, if I can time it perfectly, I can roll it into my Friday position, roll it back into Thursday, and then if we do go down a couple of strike points, there's going to be a lot more premium on Friday where I can roll this into something maybe like a 43.45 or 43.30 or whatever, depending on how we perform tomorrow. But that would be the game plan only on the call side. On the put side, I'm going to be very cautious once again, because we do have another action-packed day. At 8:30 in the morning, we have initial jobless claims. Then we have 9:55 Fed member Bowman. He's speaking. Then we have at 10 o'clock existing home sales. Then here we go again with Fed Chair Powell is testifying. Existing home sales month over month again at 10 o'clock. FOMC member speaks Mester at 10 o'clock. So we have a lot of those going on tomorrow. And that's pretty much it. There's crude oil inventories, but they don't really make a big drastic change on the S&P 500. So another action-packed day tomorrow, where we could see some volatility happen. So thanks for watching, and we'll see you tomorrow. Thanks. Bye-bye.